In this video, I'm going to be talking about the CMHC's response to COVID-19, their tightening of mortgage regulations, and how it affects you as a buyer. So before we get into it, my name is Regan Mackey. I'm a real estate agent here in Edmonton, Alberta. I created this channel for people who are looking to buy, sell, or invest in real estate. So if that is you, be sure to hit the subscribe button to see all my future videos. I'm going to be pumping out a ton of great content, 3 videos a week for you. So let's get into it. So I'm going to be giving a real life example at the end of this video of how these changes affect buyers' buying power in today's market. So make sure you stay to the end of the video for that. But I'm going to start off by reading this quote by the CMHC. They said, COVID-19 has exposed long-standing financial market vulnerabilities, and we must act now to protect the economic future of Canadians. So what do these rule changes mean? Essentially, it's going to make it more difficult for buyers with less than a 20% down payment to qualify for the CMHC's default insurance. And essentially, there's 3 new rules that they have put into effect on July 1st. So the first one is they've changed the minimum credit score that you need to have to qualify from a 600 to a 680. These next 2 changes are a little bit more difficult to understand if you're not from a finance background, but it should make more sense with the example at the end. So the second change that they've made is your total gross debt service ratio is now changing from 39 to 35% of your annual income. This is essentially just taking your total housing related costs and dividing by your gross monthly income. The third change that they've made is now your total debt service ratio is changing from 44 to 42%. Now, this is taking your total debts every month and dividing by your total income. So some good news for the first-time home buyer is the CMHC hasn't actually eliminated the minimum down payment of 5%. So that's good for you. If you don't have a ton of money saved up, you can still get in with 5%. It's just going to be a little bit more difficult for you to do that. You're not going to be approved for as much. Now, that's shown in the example I've been talking about. Now, if a family is grossing $100,000 a year and they're looking to buy a house with a 10% down payment, previously they were going to be approved for $524,980. Now, after the changes on July 1st, they're only going to be approved for $462,860. Now, that's quite significant and can actually make a difference in the type of house you get with the budget that you have, and it's a difference of 12%. So if you have any more questions regarding this, I'll leave my email in the description. Feel free to shoot me an email and I'll be able to answer any questions that you have. And guys, if you got any value out of this video, I would really appreciate a like. It would help my channel out a lot. And if not, if you'd like to see any more videos of me, feel free to click the subscribe button and I will see you in the next video.